Today is the Fed interest rate decision. There are a lot of theories in the crypto community to whether Fed interest rates will affect the crypto markets or not. And I'm going to dive into that in this very video. Not only that, if you look at this very point on Forex Factory, it is covered that the Fed interest rate is today, and the forecast is 4.50 basic points. And will Fed cut rates today, or they're going to leave rates unchanged? I'll be diving into the detail about interest rates, what it means, and if there is an interest rate cut, what impact are we going to see in the crypto market? And if there is no interest rate cut, what impact are we going to see in the market? Because there are a lot of people saying that interest rate is going to really spice the market, and people are also saying that interest rate doesn't really matter. Interest rate cut or no interest rate cut, the bull market is still going to happen and market is going to shoot all the way to the upside. There is other group talking about if there is no interest rate cut, we are not going to see aggressive pump. All of these and many more in this video. Watch the video all the way to the very end. So the first thing here is this federal fund rate is very important. So from the United States, they do release federal fund rates 8 times in a year. 8 times in a year. And right now, the previous was 4.50 basic points. And the forecast, that is what economists are projecting the interest rate to be today, being 30th July 2025, is 4.50. That means it should remain the same. There should be no interest rate cut. Now, all of this boils down to the fact that we have to understand what interest rate is. So I will represent it by interest rate, okay? So interest rate, what does it mean? Interest rate simply means the cost of borrowing, okay? So you can say the cost of borrowing. So what it costs you to borrow money from the bank. So in this very case, what it costs you to borrow money from central bank. So let's say there are smaller banks, okay, that is under the central bank. So let's represent this as this is the Fed, okay, Federal Reserve in the United States, okay, and then we have other banks, okay, that follow Fed policies. These are other smaller banks that follow Fed policy in the United States. We know that the United States is the biggest economy in the world, so their monetary policy almost directly or indirectly affects other financial system. And this is very important. So if these smaller banks right here have to borrow money from the Fed, okay, they have interest rate that they're going to pay on that borrowing. That's why I said interest rate is equal to cost of borrowing in the simplest term ever. And then if they should pay interest rate, that means for them to borrow out to personal individual, borrow out of company, those companies who have to pay interest rate. So that's how it works. So simply look at it as interest rate is the cost of borrowing in this particular sense, okay, in this particular sense of this very data that's going to come out today. And this is very important. So if interest rate is equal to the cost of borrowing, what makes Fed to either cut interest rate, keep interest rate unchanged, or hike interest rate? Let's dive into that. So it's very important. So this will bring me to what we call quantitative tightening and quantitative easing, okay, because that's what Fed do. They do either quantitative tightening, which is what we call QT, okay, I represented by QT, quantitative tightening, and quantitative easing. So what quantitative tightening mean is we have to consider the fact that if Fed want to do quantitative tightening, they want to tighten the economy, okay, what they do is they hike rate so that people will not be able to borrow money. Example, look at yourself borrowing money at a very high rate, let's say 5%. And also look at yourself borrowing money at 2%. You see, there are two differences. If they say you should come and borrow money at the rate of 5%, you will not be that interested to borrow. compared to when they say come and borrow at 2%, or if you borrow, you're going to pay 2% interest or 1% interest. You'll be willing to borrow, and that is what happens in businesses. Okay, if the interest rate is low, the investor will want to borrow money because the interest rate is low. He or she will be paying at a lower interest. And if the interest rate is high, investors will not want to borrow because maybe the economy is not looking fine. And that is why Fed is hiking interest rate. So quantitative tightening is equal interest rate hike. So what causes interest rate hike? Basically inflation, okay? And inflation is measured from different parameters. And one of those parameters is the CPI, that is the Consumer Price Index, which is what measures inflation in the country. So if the CPI data is becoming so high, increasing, it means that inflation is actually increasing. Like I said, it's one of the parameters that Federal Reserve or central banks in every country use to measure inflation, including the GDP and the PPI, okay? All of these factors, but one of them is the CPI data. So when they look at the CPI data and discover that inflation is climbing upward, so to keep inflation under check or to keep inflation down, Fed will hike interest rates so as to squeeze the economy, to bring money out of the economy, and also to make it very difficult for people to spend. Because of course, if there is quantitative tightening, people will not be willing to spend their money that much. So it will further bring down inflation. That's how it works. I hope you're understanding. So this is what causes interest rate hike. So high inflation result in interest rate hike. Fed is going to hike interest rate maybe from 3% to 4%, or from 4% to 4.5, or to 5%. That is hiking interest rate. Now, the other one is quantitative easing. Quantitative easing means Fed is reducing or cutting interest rates. And that is what we call interest rate cuts, okay? Interest rate cuts. So what caused this is still inflation, CPI data. If the CPI data is low or coming back down, Fed will want to cut interest rates, okay, to encourage borrowing. Because if people borrow, definitely they're going to spend the money maybe for investment or for other stuff, and the economy will start to boom again. And this is typically what happened in almost all economy. This is what Federal Reserve Chairman, the person of Jerome Powell, and other central bank chairman, this is what they do. So in the case of interest rate cuts, Fed is trying to encourage borrowing, okay, so as to encourage people to spend more. Thereby, this also encourage inflation a little bit. But if inflation is getting out of hand again, they will go back to rate hike. So it goes front and back so as to keep inflation in check. I hope you know that lower CPI, that is a very low inflation, is not good for an economy. That is, the inflation is very, very low. And a very high inflation is also very bad for the economy. So what Fed do or central bank do is to keep it stable. You keep inflation stable. That is what brings to economic growth. So this is what it means by quantitative tightening, very important, which result in interest rate hike, and quantitative easing, which result in interest rate cuts. So once you understand this, you can reason it out from previous CPI data, maybe year-on-year CPI data or month-on-month CPI data, and what has happened maybe in the previous 3 months or 6 months. Once you understand this, then you can decipher yourself whether Fed is going to cut interest rates or they are going to leave interest rates unchanged, because sometimes Fed will not just hike or cut interest rate. They may decide to leave it unchanged, okay? Unchanged. No change to interest rate. And this is what we've been seeing in the past few months. So in this very situation right now, we've seen that inflation in the United States since President Trump took office have reduced, have come back down. But Fed have refused to cut interest rates. Why? They mentioned the fact that President Trump tariff is a threat. Okay, so they don't really know what is going to happen with the tariffs, because actually tariff in one sense can actually cause inflation, and I don't want to go into that in this very video. But in the past 4 months after President Trump began to impose those tariffs, we've seen that his tariffs are not causing inflation. Rather, inflation is coming back down in the United States. So Fed should cut interest rate. That's my personal opinion. There should be interest rate cuts. But since there is uncertainty on what these trade deals is going to look like, nobody knows. They keep saying interest rates will remain unchanged until the tariff situation have been fully clarified. Now, this is my take on this very situation right now, because this is very important. So for interest rate this very month, personally, I am looking at Fed keeping interest rate unchanged. Okay, that is my opinion, and this is my personal opinion right now. I look at Fed should keep interest rate unchanged. So Federal Reserve should keep interest rates unchanged. We should not see a change in interest rates, no cuts, and that is 60%. 60%. And if there should be a rate cut, that is just 40%. So from the scale of 1 to 100, 60%, no rate cut, it should be unchanged. That is the 4.50 basic points. And if there should be a rate cut, that is just 40%, in my opinion. So this is what I'm expecting this very month. 30th July 2025, Fed should keep interest rates unchanged, and that is my personal opinion. So now the question of, does this affect the crypto market and all of the stuff, that is what I want to answer right now. Now, if you look at what I've just explained, if people will be able to borrow money at lower interest, what do you think is going to happen to the economy? Because if I am borrowing money at 2%, okay, from central bank or from any bank, and borrowing money at 5%, in fact, let me just use the current rate right now, which is 4.5, okay? And I'm borrowing at 4.5%. I think even you watching this video right now, you will want to borrow when it's 2% because it's lower, okay? The interest rate is lower. That's what happened in times like this. So when Fed lower interest rate, people are willing to borrow money, and some person is going to put it into crypto. That's it. They're going to put it into crypto. And this is going to make the buying pressure in crypto to increase, and thereby increase the price. So that is why some folks are saying interest rate is a must. And some are also saying interest rate is not a must for us to see that aggressive pump in the market. So this is a simple concept. So if the borrowing rates, the borrowing cost is low, people will be willing to borrow more and invest in other stuff. Now, this is my personal opinion. If Fed cut interest rate, let's say to 2% in the future, I am expecting the rate cut in September, because after today, the next interest rate is going to be in September. And personally, I am expecting the rate cut by September, because by that time, we should know with certainty that President Trump have already entered a deal with the EU. Of course, the last visit he made to Scotland, which I think is just coming back, he said he has made a trade deal with the EU with 15% tariff. Okay, but that is just a framework. It's not a signed deal. That's just a framework. And also we have that of China. So these are the two trade deals that we should see get done by September, or before the interest rate in September. If that happens, and with the way the CPI data have been coming out and inflation keep going down, then I'll be very sure that Fed is going to cut interest rates in September. So having said that, if you look at this, in my opinion, if Fed cut interest rate to 2% in the future, maybe sometime this year or early next year, what that means is it's going to spice up the crypto market. I believe interest rate cuts or no interest rate cut, the market is still going to move upward. That's my personal opinion. And if there is interest rate cut, it's going to further spice up the market. Let's say, for example, if the market is supposed to move, let's say a particular coin was supposed to move 100% without interest rate cuts, interest rate unchanged at this rate, and there is now interest rate cuts, let's say to this rate, then I'll be expecting the crypto market to do this coin in question to do, let's say 150%, because it's going to spice up the market. That's my personal opinion. So interest rate cut or no interest rate cut, the market is going to move. But interest rate cut is going to spice up the market to do more than it should do without interest rate cut. So this is my personal opinion on this. Now, another thing that is very important here is that we know for sure that the current Fed chairman, his tenure is going to expire by May next year, 2026. And there are all considerations to fire Jerome Powell by President Trump. But from recent things I've seen, I don't think he's going to fire him. He's going to allow him to, complete his term, except he resigned by himself. But here is the take. The next Fed chairman is going to be appointed by President Trump. And of course, you know that he's going to appoint a person that is going to align with him on economic policy and economic issue. And definitely that person, when it comes, is going to cut interest rates. Very certain is going to cut interest rates, because right now, as I'm speaking, inflation is down, even more than expected by a lot of economists and analysts in this present United States economy. So interest rate cut is a big deal. Next year, they're going to really cut interest rate. If Fed do not cut interest rate this very year, especially September and November interest rate decision. So this is my personal take right now on this. And of course, if you've been listening to President Trump, he has been advocating for a 2% rate cut, okay, to 3% rate cut. What that means is, right now, the interest rate is 4.5, okay, or you can call it 4.50 basic points, okay, so 4.5%. He has been advocating that inflation is low, inflation is down, no inflation, and there should be 3% basic point cut right here on this. That is bringing interest rate to 1.5. And this was around the area that we saw in his last presidency in 2017, 2018, okay, and there was a crazy market pump all the way to the upside in crypto. And this is very, very true. So the next person that is going to be the next Fed chairman, that is in May next year, is going to definitely cut interest rate, and that is going to be massive. I am expecting next year, in as much as inflation remain very, very low, or as it is right now, the interest rate should drop to between 1 basic point, that's 1% to 2%. We should see interest rate between this number and 1%. That's my personal opinion, especially when the new Fed chairman comes on board. So this is what I am looking at in all of this. The main takeaway here is for you to understand interest rate, which I've explained, understand rates hike, which is equal to quantitative tightening, understand quantitative easing, which is equal to rate cuts, and also understand what is happening right now in the United States economy. And my opinion is, rate cut or no rate cut, market is going to move upward. We're going to see market move upward. The altcoin season is going to come, all things being equal, no war and no pandemic. And then if there is interest rate cut, then that is going to spice up the markets. If you gain value from this video, consider supporting this channel by leaving a like for this video, subscribe if you haven't already, and turn on the bell notification for more crypto videos like this one. Also check the channel for other crypto content. Join our Telegram channel for Signal, that is Crypto Signal, on-chain data, fundamental analysis, technical analysis, and many more. Join right now, link in the description of this video and also in the pinned comments. It is a free Telegram channel. Thanks for watching, and I will see you in the next video.